Hello, Matt. It's great to be here again. For those that don't know me, my name is Mark Chalmers. I'm President and CEO of Energy Fuels. Energy Fuels is a very unique story in the fact that all things reducing carbon emissions, electrification. We have a long history of producing uranium. That's been our core business for decades. But we've also entering into the rare earth business, which fits perfectly together with our uranium business, and also advancing some initiatives on radioisotopes for cancer therapy. So, anyways, exciting story. We there's no one like us that cover these kind of critical elements. And as I said, Matt, it's always great to catch up with you again.
Well, good to have you back. I mean, I hope you had a good Christmas and Happy New Year to you, sir. We didn't get to catch up before Christmas because I went away. I was lazy. I had a holiday. But the news about the uranium US, the US Uranium Reserve, obviously allocated 18.5 million. They seem to have kind of spread it around a bit, trying to help the industry as a whole. Were you you okay with what you ended up with on your contract?
Yeah, look. They did spread it around. It was long in coming, but it did finally arrive. Santa showed up just before Christmas. But yeah, look it. It's 18.5 million bucks. We sold our product at around almost $62 a pound. We had inventory that was valued on the books around $25 a pound, so we get a nice little lift. But I'm hopeful with all these other initiatives by the government that there's a repeat story here. As you know, initially that was supposed to be around $150 million per year over 10 years, and this first award was around $75 million. So, let's see where it goes, but I think it all bodes very positively on the focus of the United States government on reestablishing the nuclear fuel cycle in the United States. And this was just a small step, but an important step. And then, let's see how it unfolds. But, the United States is the largest consumer of nuclear products in the entire world, needs to reestablish its capabilities more than it currently has.
So you ended up at $62 per pound. I mean, some contracts that we're reading about were much less than that. So was there not some sort of uniform price? I mean, how did you negotiate a different price from, say, some of the other companies?
Well, look, I don't know what other people put in. I mean, some of the companies announced what their awards were. Some didn't. Actually, we didn't announce initially what our the price was because we didn't know if we had the permission to do that. But yeah, it's varied. The government basically asked for people to put proposals forward, and several companies did, and several companies got awards. So yeah, I don't know. It was different than the past. It used to be the government, and this first uranium they procured in probably 50 years, and the old buying schedule that they had, they basically set a price, and they said those that can provide us uranium at a price, that's how it works. So this time it was more of a putting in proposals and bids on what we'd sell uranium at, but in the past the government just set a price and said please fill our boots with uranium.
Right. Well, so obviously that takes a few more pounds out of the market. I mean, market, as we saw last year, got extremely tight. Obviously spot physical uranium trust and other similars, like Yellowcake, etc. And utilities starting to, issue some term contracts, or at least put out term sheets for that. Have you got any sort of sense of where we're at with regards to the amount of sort of spot available for companies to purchase? I mean, how much better is it now than it was at the beginning of 2022?
Well, it depends how you define better, right? I think look at the market imbalance is still shifting. Available inventories are continue to diminish. Demand outstrips production. I think that this for years the inventories was always kind of hanging over the market. There was the underfeeding, going to very high recoveries, and now they're talking overfeeding. That could represent a delta just in enrichment of up to 20 million pounds per year of new demand. So there's a lot of these pieces that I don't know exactly how they fit together, but there is a deficit. There is increasing demand. There's reactors that are being restarted and prolonged. So those are all changing the whole dynamics of the market. And the price uranium still needs to go up because with inflation and the cost of developing projects, it's gone up. So how it all fits together, I don't know, but it is definitely a strengthening story.
Right. So in which case, I want to come back to the US Uranium Reserve. What did you feel, because you've been through the Section 232, you were obligated or obliged to sell to the US government versus trying to negotiate a term contract at a higher rate with utilities? I mean, how do you make those decisions about the best place to sell your pounds at any one time?
Well, again, there's a lot of different circumstances there. You're aware that, we signed 3 long-term contracts that go out to 2020, 2030, 23, or 30, excuse me. And then we've got inventory. So, in our position, if we could sell inventory now at a premium to market, because the spot market was around $48, $50, and we get north of 60, we just said, well, we got to bag it. You got to make money sometime, and a lot of people don't understand or don't really focus on that. But we're very focused on establishing cash flow, positive cash flow, making a profit on what we're doing. So we kind of look at all those factors. Now we are going to deliver into our first long-term contract in 2023, and that will be at a price, and it's got some adjustments on inflation. It's got adjustments on market, so we don't know exactly what that will be, but it's a trade-off. But when we can sell for a profit at a above market, we're going to take it.
Right. Okay. So. No, fine. I get it. You got to kind of make money along the way, or else you continue to dilute your shareholders, and there's a cost to, because we saw a few companies obviously raise money to go and buy pounds and then sit on the pounds, but some of them have been unloading that for profit. It all kind of makes sense. But what does that do for the utilities then, in terms of, do they think they've got more options on the table? Does that mean that delay their behavior in terms of issuing more term contracts sooner? Because there's a lot of companies talking the game of, we're talking to utilities, but not many of them getting over the line, not many sort of term contracts being signed. So again, what are your conversations like? What are you learning?
Yeah, look, I think our conversations, excuse me, are that we signed these initial term agreements, out to 2030, and we signed them at with various mechanisms, floor ceilings, and some formulas to come up with what so we can share an upside. But I think that where we're at right now, from my perspective, is we need these higher prices, and I think that's echoed by Cameco. They've been talking about $80, $90 for incentive prices to go forward. So I think we're kind of at this point where a number of the utilities went out, secured contracts with a few players. I think some of the uranium producers and wannabe producers were afraid to sign contracts because they didn't know and didn't think they could be profitable at what was available at the time. And so what we're doing is when there's a RFP comes out, we look at it, we figure out what our production profiles are, and we're but we need the next step higher in prices for the next contracts that we sign to continue to ramp up our production.
Right. Okay. Exciting time for uranium. I think we can agree on that one. Tightening market, tightening supply as well. It's hard not to look back at last year for you and sort of see that you're gearing up for something. And I think that's something, clearly is the rare earth component. You obviously did that deal with Encore Energy with regards to Alta Mesa. You're selling at $120 million. You're cashing in on some of your uranium pounds now. You did raise some money last year as well. The rare earth component. You got a lot of credit for it last year and the year before. Where are you at the moment? I mean, how close are you to being able to deliver that? We've talked in the past about, you've got some contracts for monazite supply. You said that you want to go out and find more. You've obviously kind of got the build expansion at White Mesa to be able to process and deliver that. So what does 2023 look like for the rare earths component, I guess is what I'm asking.
Well, I think 2023 is going to be an important year for the whole industry and the world as a whole, actually, but particularly for energy fuels with the uranium story building and also the rare earth story building as well. There's a number of elements that we will close on our Bahia Project in Brazil, which is very material acquisition for us, and we're getting a lot of interest from some of the heavy mineral sands producers to work with us on putting that into production. I hope to do other projects similar to Bahia in the United States or elsewhere in 2023, because I want to show the market that we have a reliable sources of monazite to feed the mill going forward for decades. Okay, so we need to prove and show to the market that we're going to have supply of monazite to feed the mill for decades. Meanwhile, as I've talked previously, we've got what we call phase one that we're actively advancing in 2023, where we'll have the separation capacity of about 4,000 to 5,000 tons of REO, which to put it into context is around 20-25% of the capacity of Lynas. In the end of 2023-24, we're fully permitted to go forward with that, and we're looking at what I call phase two, which is basically another phase of separation capacity, including through heavies that we're looking at in the order of Lynas capacity, 15-20,000 tons of REO per year. But we've got to show the world that we've got the molecules to feed those facilities as we build them out. So, it's an exciting time for us. And we are advancing the radioisotopes too. And that's a sleeper that I hope to surprise the market on the upside in 23. So we are positioning. And, you've heard me talk about the critical mineral hub. There will be no critical mineral hub like energy fuels in the world outside of China that I know of anywhere.
It's kind of interesting. So when we've spoken to companies in the past, like say vanadium, which you do, we've spoken to companies in vanadium who are trying to reposition themselves away from being a mining company and being a industrial chemicals company. And again, it's in your marketing literature evolve, talking about, powering tomorrow's energy technologies as well. Do you think there's some merit in that yet, or do you still have a few things to prove to the market before you can perhaps kind of reposition yourself or in terms of what it is that your business is, and maybe benefit from a different kind of multiple that mining companies tend to get? Industrial chemical companies tend to get 4 or 5 times the multiples of a mining company. Is that in your lexicon? Is it a discussion that you guys are having in terms of how do you define yourself going forward?
Well, we're trying to define ourselves as an earnings-based company. And, when we look at the multiples that Lynas and MP and those that are focused on the rare earths, it's more like 10 to 14 multiple. So we're not trying to be a chemical company or whatever. But the thing I tell shareholders is that we're looking for the best result for our shareholders. Okay, and the plan that we're executing, including with the uranium in that mix, we have models that we try to come up with the best outcome for the shareholders, of which our management team are shareholders. I think that the market still values us as a uranium play, and we still plan to be the biggest uranium producer in the United States going forward. But I think 2023 is my goal to break from that pack. We've got earnings visibility. We've done it creatively with how we've traded and swapped, and like in the case of selling Alta Mesa, and it's all focused on the best outcome for our shareholders.
Right. No, I understand that, but also there's an kind of feels like there's an evolving strategy here, and that's what I just wondered about how you want people to view you, because it was uranium with a vanadium byproduct. Obviously, with the addition of the kind of rare earth component, there's a new revenue stream further down the line. Obviously, there's a lot to do in terms of technically acquisition of the molecules and then selling into the market by financing the ability to kind of process and deliver that. So the decision was made last year. The big idea happened last year. The how do we show the market we do it thing seems to be this year. And so I'm intrigued as to what those kind of signals that you want to put to market are. I'm intrigued as to what those deliverables will be, and what do we as investors need to understand and look for.
Yeah. Well, look, and I know it's a little complicated, but I see Energy Fuels as a green energy story like none other that's out there, focused on decarbonization, electrification, and when you start saying, well, how do you want people to view how the company is going to be positioned, and where how should people look at the company? I mean, I think what we're doing is so unique that we're really blazing our own trail here. But this is a green energy, ESG focus, decarbonization, all these elements that were nobody cared about 10 years ago or 15 years ago. So there really is no example that you can hold up, Matt, on what Energy Fuels is doing and how we're trying to position it. But I am very confident that our strategy, we're going to get there. We got a lot of work to do, and I think when people see securing more monazite, see the uranium production, see us, swing into profitability on cash flow. Now, we were profitable last year by selling some of our other assets, and in the case of Alta Mesa, we bought for $13 million and sell it for $120 million. We're doing a lot of big things here to reduce dilution to shareholders. I think, and I don't know the exact number, but we had minimum dilution in 2022 because of some of the things that we're doing. And we plan to continue to reduce dilution to the absolute minimum, when we move to an earnings per share company, which we believe is in the next year, 2 or 3.
Yeah, now you have been tidied up the balance sheet, so no debt on there as well. So I appreciate it, but it's a case of you've always been quite conservative in terms of not wanting to kind of mislead the market and maybe overstate. But it feels like you're planning for something, and I wondered when you say things like, "I think we're being valued on the uranium alone." What do you think's got to come? Because the rare earth component market, took off last year. People got excited about it. And there's a lot of companies out there wanting to be or talk about being a rare earth company. So for you guys, what's more is to come? If you truly believe that uranium is the only thing you're being valued on at the moment, what do you think is to come?
Commercial production of rare earth oxides. At a scale greater than anybody else in North America, but significant for the world basically. Now, it's going to take us some time, but if we can get to that 4,000 or 5,000 tons of REO production at the White Mesa Mill, proving that we can make those oxides at those kind of quantities on spec, and securing the monazite where people can see that there's a clear path forward on the rare earth side of the business to achieve, the line of scale that they've been producing at for the last few years. I think that's the break point where you break from the uranium pack. But at the same time, we want to show that we're building up our uranium capabilities just like we've always done. We produced a third of the uranium produced in the United States over the last 15 years, second to Cameco. Between the two, we produced 86% of the uranium produced over the last 15 years. We're ramping that up as we speak, and we've got a number of our projects that we're rehabilitating to go into production, developing, and we will give more light on that in due course.
Okay, now, look, and I know you want to bring it back to the reality of, uranium is where you came from, and this, you have meaningful history, but also, in terms of scalability and inventory, you've got the ability to that will contribute to how people should value. But I'm interested in, you move from kind of the kind of mining beneficiation, crack and leach stuff, through to a point where you say, right, we will now show you the market. We can deliver on the separation side of things as well, okay, in terms of separated rare earth oxides. What's happening this year, or what's happening over the next 2 years, which is going to allow you to demonstrate that you can do that? Because that's a big moment, right? That's a big moment.
It's a big moment. And I think the phase one separation plant, we are putting in, I think, 72 SX cells in our existing SX building. Now, this is the building that recovers uranium through SX, and it recovers vanadium through SX. And it will, by the end of the year, if we meet our schedules, we will have the ability to do the separated oxides for the lights, and an SM plus, which is with the heavies, the dysprosium, terbium, by the end of the year. So we'll have a building that will do those elements by the end of the year. And we're doing it, again, in an existing facility. And we believe that we're going to do it for around $20 million to build out that separation facility, which is remarkably cheap. There's a lot of people that can't build a pilot plant for that, okay? That would be in the scale of Silmet in Estonia, the NEO plant, or greater, for $20 million. All right. When you talk, you listen to people talking about, billions of dollars, or, $1 billion to put in, say, 20,000 ton REO rare earth facility. And we're talking $20 million to put in, say, 4,000 or 5,000 tons of REO. The strike rate for capital is remarkable. Okay. Now we've got to show the market that we did it, and we built it, and it's functioning, and it's recovering, and we plan to feed it in 24. Okay, so it's not a 23 revenue stream on that front, but that's what we're trying to do. That's what we're not trying to do. That's what we are currently doing. But we have to show the market that we have broken, the barrier of doing SX at that kind of scale, at that kind of capital strike rate, economically. So, you're right. I'm not. My DNA is not to over promote. I'm an engineer, but I believe that we're going to build it, and it will strengthen our position on a number of fronts.
Yeah, like as a kind of critical minerals hub for North America, the US specifically, I think that's kind of caught the imagination somewhat. But I think it would be remiss if you weren't talking about the separated rare earth oxide component to this, especially in the return on capital that you've just talked about there. $20 million is neither here nor there in terms of the margins that are made on some of these rare earths. So so that's kind of demonstrating the technical capability, and then you need the kind of ramp up component. So you mentioned earlier that obviously we've talked about Chalmers and contracts there, and that you're hunting down obviously you're the Bahia Project as well that you picked up last year in Brazil. You've got to kind of deliver that scale. Is that, where does that sit in terms of the priority list for rare earths, the kind of feed, as it were?
We've got our plan is to look at feed in two ways. One is to procure it, just buy it from people. Now the price of monazite went from almost nothing 3 years ago when we got into the business to now it's anywhere from $5,000 to $10,000 a ton, depending on who you listen to. Bahia, Bahia will be an important piece to that security of supply, where we won't be open to sort of the market fluctuations of monazite, and we're looking at a combination of purchasing secured sources to kind of with a blended price. Okay, that we're not just value add as you pass it down the supply chain. So yeah, no, we plan to secure something in addition to Bahia, maybe, and show again that we can come up with this sort of this blended scenario that buffets the market variations by being able to produce from our own deposits. So I don't know if that answers the question, but
okay, Mark. Well, look, thanks for catching up with us today. I think it's always nice for the kind of lay their stall out at the beginning of the year, and gives a sense of what's to come, what we could be looking at. But kind of feels good out there for uranium for sure. Rare earths, we'll have to wait and see, and all of the other things that you're doing in terms of keeping that sort of balance sheet strong. I'm sort of intrigued to see what else is coming down the line from you. So appreciate your time today.